behalf of Biz Talk Today TV and Crosscheck Media, welcome everyone to a very special Buy, Hold, Sell. I am your trader, Todd Schoenberger, and my co-host, Tobin Smith, is away on assignment. He will be back. He has some very special guests for coming up on his show, Money Mavericks. You definitely want to stay tuned for that, and we will provide information as well once we know a little bit more, and as far as dates and when these shows will be launched. But with me today, I have Henry Weingarten. He is the managing director at the Astrologers Fund, and I had to bring in Henry. We just had the lunar eclipse. We have a solar eclipse coming up. You had a big day in the markets today. Henry, welcome back to Buy, Hold, Sell.
Thank you very much.
Absolutely. Well, we did have that big day today. We saw the S&P up 1.6%. We're still just what about 8% off the all-time high. But what do you think? I mean, is it because what we heard where the president might be moving back with a softer tone and maybe less rhetoric on the tariffs, or is there something more to the story?
There's more to the story, but that's part of it. All right. Everything is as simple as 1, 2, 3. Number one is we have multiple geopolitical and economic crises this quarter. I mean, nobody will argue that. Number two is that by or before mid-May, there'll be an amelioration and a great reduction. We see, for example, in the Ukraine, some real movement there and in other areas as well. And many of the tariff tiffs will be dealt with. And then the third thing is we're going into recession. So, and by recession, you could also call it a slowing economy, because you may recall 2 years ago when Japan and the UK both had 2 negative quarters. They were in recession, but the US was in 2 negative quarters, as we predicted, and they weren't in a recession. So you can talk it as you like, but there are multiple reasons, both cosmically as well as on the Earth, for why we'll be going to recession. So there'll be some euphoria with things not being bad, and they're not going to be terrible. We're not talking about depression. And then the difficulties have to be dealt with over the next 12 to 18 months.
So Henry, do you see that recession happening this year in 2025, or is this looking further?
I would say we'll be in we were the only one when everyone was bullish in October and November, and we understood with Trump, of course. We said that we will have recession-like talk and we will have a stagflation. So this quarter is down. Now, whether they show it in the statistics, I can't tell you, but we have a negative quarter. Or you can say we have a slowing quarter, whichever way you want to deal with it. That will be highlighted around the summer. We may be officially in a recession by then. We may not. If not, we will be the first quarter of next year. You have your choice.
Okay, so let's now pivot to what your skill set is. And you talk about with astrology, and you're mixing that into your analysis for the stock market. I'm fascinated by this because there seems to be a correlation there. And we did have the lunar eclipse. We're coming up on this solar eclipse that's coming up. I mean, is all of this irrelevant to how traders are thinking, or what do you think?
First of all, we do fundamental and technical analysis.
Okay.
As well.
Okay.
Yeah. Sorry for a moment.
It's okay.
People behind it.
You're on the trading floor. It's all good.
We're on the trading floor? Okay. That's okay. All right. So there are 4 factors this year that are of interest to people. The first is the Pluto in the U.S. horoscope, which we've been saying for the last 3 years, and this is not going to end for another year and a half, which are multiple changes, challenges, almost like a civil war, so to speak. And the most interesting thing is, if you ask any student of astrology about Pluto, they'll say one of the main things they'll say is it brings to light that which is hidden. How's that for Dodge? In terms of like just beautiful symbolism. Okay, number 2, we have the Jupiter-Saturn square. And Jupiter and Saturn traditionally were the astrological planets. We had 3 times that it met. The first 2 times it's already gone down. And we have it again coming up in the next month or 2. So that suggests things going down afterwards. The third, which is the more serious one, is the Saturn-Neptune. And the Saturn-Neptune is a rock on a cloud. So you just think about that image for a moment, a rock on a cloud. And you can think of the fall of the Berlin Wall. If you know anything about mining, you can think of the Bre-X disaster. So we can say that things can really fall apart. They may not, but there's a danger for it. And then the last astrological thing, which is rather interesting, is the eclipse in April is on goes right across North America, Mexico, US, and Canada. So if I were looking at this 2 years ago, I would have said, you know what, there's going to be some shift in the way that the North American countries are dealing with each other. And of course, we know that's happening April 2nd. Exactly how it's happening, we don't know. It won't be terrible, and it may be very short-lived, but it's certainly speaking with a strong stick. So these are the basic things. Now, outside of that, you've got a market that's extremely overvalued. You know, you have the 7 stocks, you know, at absurd levels. We only had a 10% correction. That was guaranteed. Will we be a bear market? I think there's a 50-50 chance it will be by the summer or by winter of next year. That's just based on the fact that the earnings are not up, the PEs are just off the charts, and people are being squeezed. You know, we do have stagflation first before we go into recession-like issues. So if you look at the cost of, and on the other side of the coin, if we talk think about Trump, there are 3 things you can say that they're absolutely certain with Trump. And one of which is, of course, egg prices are going to be down. No question about that. Oil prices are going to be down, and there's no question about that either. So there are a couple of things that you can deal with and before November that are just guaranteed to happen. And we have that on our webinar in details, like an hour, if you want to listen on Henry Weingarten. We just put it on YouTube.
Okay, so, yeah, and that's great. And we definitely want to plug that as well.
So definitely, in my viewpoint, the astrology corresponds to, we're not saying it causes it, but with a high degree of confidence, you can say what I've just said. For example, we'd be talking about recession like this year, and no one was, when we got to October, November, nobody was talking, and January, no one was talking about that except us, a few other people, of course.
Okay.
So, yes.
Okay, I get that. So, okay, so how does that correspond to the stock market, though? I mean, because
the stock market, well, you just had a 10% correction, I think, and more. Do you know that, for example, the last couple of days, 3 times as many Nasdaq stocks hit their 52-week low as opposed to their 52-week high? We have lots of stocks in bear markets, lots of them. Okay. So forgetting just a few of them. And I think that's going to continue because the fundamentals are not great. Now, eventually, I think things are going to be good. I'm not a growling bear. I'm just saying it's realistic that the profits won't be up. Now, on the other side of the coin, it is true that with Trump, he's very favorable when it comes to stock market. I don't think he's insane about it, but the point is he does want to have less regulation and he does want to have lower taxation. And that's good for business. There's no question. And in the mining space, which we do a lot of, the idea that to take 10 years or 15 years to get a mine going is absurd. You do want to take advantage of the clean environment and clean, but that could be done in half the time. There's no reason it should take more than 6-7 years to go through all the proper approvals. Nothing wrong. And by the way, speaking of that, if I may, and we're big bulls on on precious metals, gold and silver. Last year there was a big help with the astrology, which we predicted that gold was going to go way up and silver was going to go way up, but that's it. Now, what we also said was that silver would only get to 34 to 38. We've shorted it 3 times already at 34, getting 10%. We're short again. We are also went short gold at 3,000. Remember, we were just 2,000 about a year ago, and here it is. We're at 3,000. We went short at 30.55, covered it twice. It's too expensive. That doesn't mean we can't get to 3,100 or 3,500. We can go anywhere, but that doesn't mean it's going to stick. And if you think about natural gas 2-3 years ago, it was $10 one year, $2 the next. So anyone who thinks that we're not going to break 3,000 or 2,800, probably stop at 26. Doesn't understand how markets work. So what we recommend is buying wholesale, not retail. And what do I mean by that? Why do I want to pay $3,000 for gold when I can buy it for $1,200? And why do I want to spend $34 for silver when I can buy a company like Mag Silver, which did very well today? It's one of our core holdings that I can pay $12 an ounce for. Why pay $30? If you take a profitable silver or gold company or near production, it's going to way outperform silver and gold. That doesn't mean you shouldn't have some physical, but the companies are buying wholesale rather than retail. And if you have a good list, you'll make a lot more money.
Right. Okay. So let's get further into the gold and silver argument. And I understand it because if there is a recession that's looming, then it just makes sense that investors will look for those tangible assets. But if I hear you correctly, first, I have to ask you this, though, Henry. If I hear you correctly, am I to assume that you are saying that we have not hit the lows in the market so far this year?
That's our view. If it's not now, it's next year.
No kidding. So we could still see further selling, whereas you have these one-off patterns like we saw today.
Right.
But what you're saying
Well,
is we have
today
further
it's a
to go.
game of chicken. Between now and April 2nd, it's a game of chicken.
That's right, because
Once
of the
we're
reciprocal tariff.
past that, then when people want to put their money in till April 15th, and then the question is it sell in May and go away, which we do almost every year. We didn't last year because of the April eclipse, but normally we do. In fact, we're going to do a webinar on that because we're not sure whether we're going to sell or not. But in general, you can sell and come back in September, October, and you're fine.
Okay. So let's now talk about the commodity. Let's follow up on the gold and silver. As you know,
And copper.
Right.
Went up.
Gold has an 80-to-1 ratio on the price of silver. If you see gold, and there are some price targets right now showing that it could hit $4,000, if that's the case, you should be seeing silver pop quite a bit, obviously, exponentially.
Look, we have 3 resistance points, 38, 40, and 50. We went short last time, silver on at 49. But the point is, what people misunderstand, and Jeffrey Christian of CPM, who just put up his gold thing, is very good at this. There's no shortage of silver. Silver has 2 drivers. One is gold. It's a monetary metal. Secondly, it's an economic metal. If we're going to be in a recession, that's going to go down, number one. Number two, if you take away investment demand, there's no shortage of silver. It's with investment demand there's a shortage. So that's a sort of little circular argument. Gold's a little different, has multiple different drivers. The thing that's driving gold is primarily crises. But if I'm correct that by mid-May the crises are reduced dramatically, then gold's going to drop $100, $200 because it's not trading as $3,000 is because it's a crisis. $4,000 is because it's a crisis. Now, of course, if you wait 20 years, of course, yeah, it'll be 4,000 to 5,000. Just like Nasdaq we were shorting it at 5,000 in 2001, and here it is, 18,000. But that's 20 years later. So if you have a 20-year view, we're going higher. But if we like a house, but if you don't, it's overdone, and you'll make more money. Now, if we do go to 4,000, the gold stocks are going to go to the moon. Now, they haven't in the last year or two, but they will then. If we go down, the gold stocks and silver stocks will go down more. But as soon as we stabilize, do you know that today, most gold stocks are trading as if gold is 1,900 to 2,100, and they're trading as if silver is about 18 to 22. And we're much higher than that. So even if we drop to 26, we drop to $26, and even we go to, say, 2,600, it's way undervalued, and the value traders will get involved. So we think you should be adding that as well. I think, look, there are reasons to be wanting to have buying gold. You should have 10% in your portfolio, maybe 20, maybe 5, but it's not the end of the world. And if it's the end of the world, gold and silver is not going to help you. You need guns and you need food.
Good point. Very good point. So, okay. So, and also what could also drive up the metals even higher is political unrest, worldwide unrest. What are from your astrological hat on here, Henry? I want to ask you, what are we seeing for the war in Ukraine? Will it be ending anytime soon?
I believe it's going to be, yes, clearly. I think by May, because both Trump and Putin want to end it. They're doing some very clever ideas about saying, let's not do the Black Sea, let's not do let's not hit each other's infrastructure. I mean, first of all, let's face it, the Ukraine lost. There's no way it can win against Russia 4 times bigger. And if they fight more, hundreds of thousands of people are going to be killed on both sides. To no avail. Russia, look, Hitler couldn't win, Napoleon couldn't win, Zelensky is not going to win. That's absurd. And all you're doing, well, I won't get into the politics of it. It's not a good thing. They've lost the war. Let's make it so they can keep the Ukraine and it doesn't get taken out, which, remember, for hundreds of years was part of Russia. And even Kiev is the Greek Orthodox home. They don't want to destroy it. But there's lots of things that we could get into, and some of your audience will be happy with what I have to say and some won't. But the point is, it will be reduced. Hopefully it will end. But if not, it will be dramatically reduced, which means there's much less of crises. Then all you have to do is worry about China and Iran.
Okay. All right. Well, I like that. I mean, you mitigate one threat, so
Yeah,
could see where
that's
that
a big
goes
deal.
then.
That's a big one. Yeah, because
Yeah, it's
that's
a big one.
nuclear. That's scary.
Right, right. No doubt about that. So with that, then let's turn the page to the Astrologers Fund. What is your best investment? Or are there sectors that are in favor right now? Because what you're saying is we're looking at a potential recession. Are there areas that investors should be looking at or should stay away from?
Yes, you should raise cash,
Okay.
number one. You should, if you're capable of trading, trade short term because it's trader's paradise and take your profit every day, which we do, or have a very long-term view. If you buy your house and you're not a flipper, you're going to hold it for 5 to 10 years. I was talking to someone who was complaining that their tech stocks were down 10%. And I said, what'd you make last year? Well, 25%.
Right.
So you're up, right? Yeah. I said, you own your own home? Yes. Are you, what do you think about it? Well, I'm going to hold it for multiple years. I'm going to make money. I said, well, it's the same thing here. You'll hold, it's not so much timing the market, which obviously I think we can do. It's how long you're in the market. So if you're in it for
Right.
5 to 10 years or 20 years, you're fine. If you take companies that are quality and that produce profits, if you do stocks that have just absurd valuations, then they're in a recession are going to be hurt the most. Because at a certain point, and there's no blood on the streets. Warren Buffett says, buy when there's blood on the streets. 10% is not blood on the streets. That's and sell when everyone's buying. I mean, that's how you make real money. So
Yeah.
basically, be more cautious and don't use too much margin. So if you were able to buy in October 22, which we forecast, unlike most people, and you have the money to do it, then don't worry about it. Then you don't have to sell everything. But if you don't have cash, and the lowest levels today in 20 years, most fund managers have, which is a very negative viewpoint, by the way.
Right.
So as long as you have cash, do quality stocks and step in. I mean, for example, we had said we were shorting Tesla for quite a while for multiple reasons. We said it was definitely going to go to 225 to 222, which it did. I didn't buy it there because I think it can go to 150. I may be wrong. That may be the bottom. If it goes to 150, I'll be happy to buy it because next year they have some drivers. Right now, there's profit issues and many other issues. Within a year or two, it will do very well, but I wouldn't pay as much as people are willing to pay. I'm a value player, a cosmic value player. I'm not momentum, but you can play momentum too, as long as once it becomes overvalued, you put stops in trailing. So just be
Right.
more cautious. There's no reason. I think eventually 2 years from now, we'll all be happy campers, but it's not going to be without pain. No
There's
pain,
some
no gain.
short-term pain then. So for the time that we have left in the show, I have to ask, so what
Sure.
are the stars, the planets aligning? What can we expect and how will this impact, say, consumer behavior, investor behavior, maybe over the next few months?
They're going to have to tighten up because people are, we have inflation short term. That's one of these labor things. So even when egg prices shall drop 20, 30%, they're still up. Oil prices are going to stay moderate. But the point is, the problem with most of the public is, if you can see my hand for a moment, Buddha said, if you're like this all the time with your hand, fist closed, you're deformed. If you're like
Okay.
this all the time, then you're also deformed. So what that is to say, 1/3 of the time markets are down. So why do you want to be long the whole time? I mean, to be professional, you can go long short, but that's too much for most people. But the point is, you don't have to be always buying all the time, unless there's some good valuation. If you bought a house in 2007, you lost a lot of money for a while. It takes 20 years. If you bought it 2009, you did great. So it's the same thing in timing. If you have a stock that's doing well, and there are always special situations, we deal with that, and there's an hour discussion on our website with, you can watch it, that's fine. Other than that, you know, over time, things will be good as long as you're not chasing some rainbow it's not realistic.
Okay, I like it. Well, that is, and for the website, it's afund.com, which
And
A for
and
astrology.
YouTube is Henry Weingarten. You can go straight
Henry
there.
Weingarten on YouTube. You got to subscribe to his channel. It's wonderful. You have thousands of followers on there, Henry. I was very impressed. You definitely have a big following. Everyone likes to hear what you have to say, and I know that they get a lot of value out of it. So
Thank you.
wonderful. Henry, any other way that investors could possibly reach you?
Well, is as long as they don't want personal information, because we don't give it for free. You know,
That's
the
okay.
old saying was, nobody buys the cow if you give away milk. But we do have a lot of press. We do have an email, hwafund.com, but I'm not an advisor for someone. We have general information. A lot of it's free. It's up there, and if they pay attention, it's certainly non-traditional. It's not the same as what you get from everybody else. And for the last 35 years, it's world class. So why
That's
not
great.
pay
That's
attention
great.
to it?
Well, that's great, and we will have for the audience the links to both
Sure.
Henry's YouTube channel as well as to afund.com, and we
Great.
would
Thank you.
encourage everyone to visit both, actually. So that's great.
Thank you.
Henry, thank you so much for joining me today on Buy, Hold, Sell. I do apologize that Toby wasn't able to join us, but I know
You're
we'll have you
fine.
back again, and we'll have
We'll
him
come
on
back.
as
We'll
well.
come back in May it's a question whether you should sell in May and go away. It's a perennial question.
I love that. That's right. Well, that will be wonderful, and I look forward to it. So on behalf of Henry Weingarten, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. Coming up later on this week, we have Scott Ladner, as well as Danielle Shea. She's coming back to Buy, Hold, Sell. She has a lot of great option strategies for you to take a look at. So thanks again, and we'll catch you next time. Take care.
My pleasure. Thank you.
Buy, Hold, Sell, brought to you by Crosscheck Management.